let's get a move on and connect with another corporate voice. We've got Chander Agarwal, MD at TCI Express, now joining in on the show. Thanks so much for taking time out. We wanted to get in a sense as to what the outlook is with the freight costs going higher. Can you just give us a sense as to what the impact of the higher fuel prices and the freight prices and the impact on demand, if any?
Right. So the most important thing is that in the express business, in the TCI Express business, we have a price mechanism system where the cost is actually transferred right away as soon as the fuel prices increase. However, in the spot market, where a large chunk of the logistics moves, there we have seen a really high increase in the freight rates. But positively, the demand hasn't really come down because logistics is something that goes on, even though, with the high costs, we don't really see a reduction in the transportation happening, or even for that matter, people traveling in the cars are reduced. It's just that the cost is passed on. So we are in that stage where, the economy is also restarting post-COVID and all of that. So consumption is strong, manufacturing is getting stronger. So the cost is being absorbed.
Okay, fair enough. What's the outlook as well on the lag to pass on this freight impact? Will there be an impact on your overall margins due to this?
Not really. In our business, it's pretty much like a straightforward pass on. It's not like there's a lag where the contracts have to be, we have to wait for the recontract to happen, because that's more prominent in the logistics or the 3PL side of business. But in the express business, where the demand is continuous, and we have demand from all fronts. We have the SMEs, we have the large manufacturers. So all of these guys, the shipments have to be delivered before time, and for that, the cost is easily absorbed.
Okay, so that's how it's looking on the costs on that front. Do you think the economic recovery will also help to boost the demand for logistics? And are you looking at investing according to those projections? What is your sense when it comes to the uptick and how things will shape up?
So, it's a very, the economy, the way it moves is all dependent on a lot of factors, as we know, like the banking, the interest rates and all of that. And the consumption has been strong in this COVID year, with especially the farming sector. Going forward, I see that the middle class, the major chunk of the economy that spends, will come to light. So we will see that that consumption is going to go up, and with that, definitely, when that happens, the logistics requirements also go up. So if the government is projecting an annualized GDP growth of, 5 or 6%, then we would see also a growth of at least 12 to 15%.
Okay. Where do you see demand coming from as well? When we talk about the SME segment, that's definitely seen better demand, but how is that stacking up now vis-a-vis some of the other segments? Where are you seeing signs of further optimism?
So the SMEs have been they were the first to spring up when the COVID lockdown was opening up. And they also, going forward, I see that they will keep maintaining that strong momentum, and understanding what has happened this year in COVID, through the COVID times. We've also planned to open another 100 branches next year that will primarily cater to not just the SMEs, well, primarily the SMEs, and then also the large customers that are expanding their spread throughout the country.
What's the sense that you're getting when it comes from your overall margin picture? Because you have managed to maintain a steady margin trajectory. You spoke about how your margins are not going to be impacted with these, with the change in rates as well. So what kind of margin trajectory are you looking at?
There is no change as such at all in our projections, and we will continue maintaining at least 35 to 40% increase year on year in our EBITDAs, and I think it'll show when Q4 is over. That will definitely be the case.
Okay, and what's the plans when it comes to your capex going forward with respect to the sorting center in Pune?
So we have planned 400 crores for 5 years, and out of which we already spent about 200 crores in the past 3 years. Going forward, yeah, we have the plan intact. The sorting center in Gurgaon and Pune, which is going to be one of its own kind in Asia and in India. That is in the investment is going. There's no change in that, and we hope to complete it with all the shutdowns and the lockdowns. So we plan to set it up and get going by at least Q2 of the next financial year.